Our next guest doesn't see this rally as a buying opportunity. Joining us now is Vital Knowledge founder Adam Crisafulli. Adam, what's your read on this market? I mean, we spent a lot of time reacting to some pretty dramatic moves and then digesting them. Are we in digestion mode, or which way is this headed?
So we've obviously had a very powerful rally off of the lows. We got great news out of Geneva over the weekend, a huge de-escalation in trade tensions. I think the market now roughly assumes that you're not going to really see tariffs much beyond the 10% baseline. So the tariff narrative is a little bit towards the complacent end of the spectrum, which is a little bit concerning. We've had, we had a very strong calendar Q1 earnings season. We had strong April end results so far too, here, Walmart, Cisco, and we've had pretty encouraging April economic data. The one caveat is what Walmart said today about how the price hikes from tariffs aren't really going to be rolled out until the end of this month and in June. So it's hard to get too excited about the April data when we know that the full effects of tariffs on the economy and on the data is kind of yet to be seen. I think that's really one of the reasons to be a little bit cautious, along with valuations at these levels. The S&P is trading at north of 22 times earnings, which is obviously a pretty rich level.
Still got this discrepancy between the hard data and the soft data, the hard data generally being positive when we get these numbers out, but the anecdotal stuff, how people are feeling, not necessarily keeping up with that. In a way, Walmart seemed to be giving a reason to be concerned. And you could maybe even read some of that into Fiserv as well with what they're saying about Clover, though maybe that was isolated.
Yeah, I mean, we've heard from a lot of companies, Q1 earnings season just ended, and a bunch of companies spoke at conferences this week, and it seems like the environment is still relatively healthy, or at least a lot better than, what the narrative in the world would suggest, given all the volatility. Consumers are still spending, companies are still spending. It's hard. There definitely is some noise.
Hold tight for just a moment. We've got Applied Materials earnings out now. Christina Partsinevelos has the numbers, with the stock down about a couple percent.
Yeah, it's a mixed report, John, and this is a semiconductor equipment maker. So for EPS, earnings per share adjusted, $2.39. That was a 8% beat on revenue of $7.1 billion, so ever so slightly a miss for their Q2 quarter. In terms of semiconductor revenue, that came in also a little bit lower, so that could be contributing to the drop now, down 2%. Semi revenue is $5.26 billion, so slightly less. In terms of non-GAAP gross margins for the second quarter, slightly better. If we're talking about guidance, this company usually only guides one quarter ahead. The EPS $2.35 is higher than what the street anticipated. Revenues, though, pretty much in line. What I'm seeing in this presser right now from the CFO, there is an interesting line. We quote, "We have not seen significant changes to customer demand and are well equipped to navigate evolving conditions with our robust global supply chain." So again, many companies, CoreWeave yesterday, Cisco, and now Applied Materials just in the last 24 hours, all saying they haven't seen any changes in customer demand. Back over to you.
All right, Christina, thank you. Adam Crisafulli, semiconductor equipment is something you got to buy way in advance of actually rolling the chips off the line. And with the idea here being that there are long-term trends where you're going to need AI equipment, you're going to need equipment for various things. Things are going digital. I'm not sure how much we should expect the demand picture to change from Applied Material quarter to quarter.
Yeah, I mean, I think it's a good point. We've heard decent things out of the semi equipment companies for the last couple of weeks, Lam, Clack, and now AMAT. There is still some uncertainty around chip tariffs. Trump has talked about sectoral tariffs on semiconductors along with pharmaceuticals. So that is something that is looming out on the horizon. But all signs point to continued robust demand for the broader industry, especially for the AI segment, which is driving a lot of the spend right now.
I do want to mention Take-Two Interactive results are out. The stock's initially headed down about 4.5%, 5%. We're going through those, and we'll bring them to you as soon as we've got them. Adam, the Trump administration doing a Middle East tour right now, announcing a lot of deals, and there seems to be this overall message about deals, whether you're talking about tariff deals or you're talking about bringing deals that bring benefit to American companies and by extension, the American economy. But all of the numbers seem to be sort of hard to digest and understand. How much do you think the market is and should factor in those numbers?
I think the market's taking it with a little bit of a grain of salt. It's really hard to kind of audit these giant numbers that get thrown out. A lot of them are non-committal, so they're not binding necessarily. But I think it is safe to say that a lot of these Middle Eastern countries are pouring a ton of money into AI. Sovereign AI is becoming, a huge topic in that industry. You had a big announcement of Saudi Arabia, the UAE, and it looks like the U.S. has kind of eased restrictions on the ability of those countries to import high-end chips. So that's definitely a big theme. And then for Boeing, the issue with Boeing isn't so much their ability to get orders; it's their ability to meet those orders. So they got a huge order this week, but the big question is, can they ramp output and production? And that's kind of the major wild card. So I think for those two areas, AI and then aerospace, that was really the big focus. A lot of the other numbers, it's a little bit kind of hard to get a firm read on at this point.